We got three things that are going to impact the market this week as far as mortgage rates go. And we'll first start off with what happened on Friday. On Friday, we had the BLS jobs report, the Bureau of Labor Statistics jobs report, and it crushed expectations. There were 178,000 new jobs in the month of March, which was more than the 60,000 that was expected, and the unemployment rate dropped from 4.4 down to 4.3%. Now, based on that news, it would be normal for mortgage rates to actually go up. But guess what? Nobody believes the BLS jobs report, and it didn't have that much of an impact on mortgage rates as we ended the week. Matter of fact, I think on Friday, mortgage rates went down just a little bit. So, big report. There will be some repercussions this week, and the impact of that report will weigh on the minds of the Fed members when they have their Fed meeting. Now, the other two things that are going to impact the markets this week are oil and what's going on in Iran, and in particular in the Strait of Hormuz. President Trump has threatened to basically annihilate all of the power and bridges in Iran on Tuesday if they have not opened up the Strait of Hormuz. We will see what happens there. And I saw this somewhere else that oil is the sun around which the stock market is evolving or revolving right now, and I would say the same thing for our interest rates, because the price of oil, as it is going up, it is going to cause inflation to go up. So really, mortgage rates, we cannot expect to see mortgage rates come down as long as we have oil prices near where they're at in the 110 to up to $120 a barrel range. Now, before Iran, we had oil prices in the 60s. Not realistic for us to see oil prices go down that low, which means inflation could possibly rise. So really, this impact, whether we end the war in Iran this week, and trust me, we got to end this war in Iran, because if we don't by the end of April, guess what? President Trump has to go to Congress to get permission to carry on this war. So President Trump and the administration want this war to end, and quite frankly, everyone around the globe wants this war to end. You know what? We all want the Iranian regime to go away, and we're doing a pretty good job of that, but we don't want to keep this war going. We cannot afford to, not just mortgage rates, but really inflation. That's really the big driver. The price of oil really controls so much. So that's the number two thing that will impact mortgage rates this week. And number three, guess what? It's inflation. That's right. This week we have two huge inflation reports coming out. So we'll talk about that. Let's go through the rest of the economic news coming out. Monday, we have a ISM non-manufacturing report. We also have on Tuesday a 3-year Treasury note auction, an ADP weekly preliminary estimate on jobs. On Wednesday, we have a 10-year auction, and we have the minutes released from the March Fed meeting. Thursday's a big one, the PCE, the Personal Consumption Expenditure Report. This is the inflation report that the Fed really uses to gauge where inflation is going. Last month, we were at 3.1%. The consensus really is that it will come down, and this is core, and core really strips out fuel and energy and food prices, because those are much more volatile. So we'll see where the inflation mark falls this week, but really we're right around 3. If we go to maybe 3.1, 3.2, that could be bad for interest rates, but that's a big report that's coming on Thursday. Thursday, we also get the final look at fourth quarter GDP, gross domestic product. Will we see, the estimate is 3.8% in the last reading. That's the expectations that we're going to see 3.8%, which is good. That's a solid economy. So we got that. And then we also got personal spending, personal income reports coming out. And then Friday is a consumer price index. All right, it's like the little brother to the PCE, but it also impacts where the Fed is going to move with regards to their Fed funds rate decisions that they will make in April when they meet. So a lot of news, especially at the end of the week, that will impact really where mortgage rates go. But the overarching thing really this week is going to be, you guessed it, it's going to be the Strait of Hormuz. Will we get it open? Will we end or get much closer to an end, a light at the end of the tunnel, if you will, on the war in Iran? And where are we at on interest rates? Well, again, we are a conventional right around 6.5%, a little below, a little higher, so I would say 6.4 to 6.6% as we begin the week. And again, interest rates dropped last week. All right, despite all this craziness going on, interest rates dropped a little bit last week. It would be nice if we could get back to that basically that ramp that we were, that decline that we were on. Maybe we have to start over, but you know what? It was a good end to the week. VA rates were right around 5.93% as we start the week. If you look at the report here, a little bit of a rise on Friday. That was due again to the jobs report, but overall for the week, interest rates are down. We got back below 6%. That's important. We need to see just some good news. We don't need great news. We just need some good news, and that will help interest rates go down. Unfortunately, we are headline driven with interest rates, and they react so quickly to what's in the headlines. And we all know that President Trump is quick to say something. I almost feel like he actually enjoys seeing the markets react to what he says. Personally, not what I would like, but hey, it is what it is. It's what we got, and we react. And there's nothing you can do to control this. There's nothing I can do, except maybe an election day. I tell you, we are headline driven and expect volatility as long as we are still in Iran. That's all I got for you this week. Have a great week. Had a blessed weekend with your families. I certainly, over the course of this last couple weeks, I've come to really cherish family even more than I did before. So, and you are all part of my family as well. So I do appreciate you all, and wish you all a great week ahead. Talk to you later. Bye.